Hi, I'm Sally Henry, Vice President of Business Development in EMEA for Key Data, the industry leader in short-term rental data. So I'm back with the latest in market updates, travel trends and expert tips to help keep you leading the market. So welcome to Key Data's Inside the Index. So the big five in ones. Let's dive right in with the big five of short-term rentals in 1 minute or less. Okay, start the clock. So in the UK, in Q3 2025, guest paid occupancy was 56%, showing a really modest increase of just 1% year on year overall. ADR averaged £170, demonstrating some really resilient and consistent growth with year-over-year increases of between 2 and 4% across the summer and autumn months. So RevPAR delivered solid gains of plus 4% in Q3 overall, driven by improvements in both occupancy and rates. And the average booking window shortened by about 4 to 5%, with the average stay length declining too, showing that guests are continuing to book closer to arrival and opting for those shorter trips. So in the UK, in Q3 2025, guest paid occupancy was 56%, showing a really modest increase of just 1% year on year overall. ADR averaged £170, demonstrating some really resilient and consistent growth with year-over-year increases of between 2 and 4%. So for a close look at these metrics, be sure to check out the winter edition of the UK Key Data Index, which we have linked in the captions below. And you can also find the latest edition at any time under our industry reports at keydatadashboard.com. So, did we see anything different across the different countries in the UK in Q3? Well, the performance was varied. In England, we saw the strongest results delivered, with a plus 4% RevPAR growth in Q3. And this was supported by a 1% growth in occupancy gains and a stronger 3% growth in ADR, reflecting a broad-based and pretty stable market in England. Now, Scotland posted slightly more modest growth with a plus 2% in RevPAR growth, and that was driven by a 1% occupancy growth and a 2% rate growth. So solid performance, but slightly more moderate growth than we saw in England. And Wales, we saw headwinds with occupancy declining at minus 2% year on year, despite ADR being stronger at plus 2%, resulting in a very flat RevPAR at 0%. Indicating really we're seeing some softer demand in Wales as operators try and maintain that price discipline and balance those rates and occupancy to try and get that RevPAR growth. And meanwhile, the UK hotel sector showed mixed results. So overall, hotels posted just a marginal plus 1% RevPAR for Q3 arrivals. But we did see some quite different behaviour across different countries and regionally. So in England, their hotel market declined minus 4% in RevPAR for Q3 arrivals, despite a 1% ADR growth. We saw a 4% occupancy drop in Q3. Now, in contrast, Northern Ireland and Scotland, they performed a little bit more resiliently, posting plus 2% in RevPAR through strong ADR rate management, offsetting some of those soft occupancy rates in Q3. So overall, in Q3, short-term rentals continue to outperform hotels in the UK. I have to dive into different regions to understand the performance. But we see short-term rental operators successfully leveraging some strong rate discipline to drive revenue, even where we saw occupancy a little flat or depressed based on the year before. So now it's time to look into my crystal ball to see the future of the short-term rental market in the UK. So the outlook heading into winter is cautiously optimistic but a little uneven. December is pacing plus 5% ahead in occupancy and plus 7% in RevPAR compared to last year, signaling really strong holiday demand as we go towards the end of the year. Those pricing strategies are paying off right now. However, the key data demand index slipped to minus 0.01 in November, with a month-over-month pullback after seeing some modest gains in the autumn, just reinforcing that demand. It remains within a narrow band rather than seeing this really strong directional momentum. And guest behaviours continue to compress. Booking windows are down between 4 and 5% year on year, and average stay lengths continue to shorten, especially as we head into those holiday months. So this means that whilst revenue as index has remained positive at plus 0.03, marking the third consecutive month in a row where we've seen growth, but the month-over-month decline of 0.004 negative indicates this slight softening of momentum as we head into winter. So performance is going to depend heavily on just how well property managers capture that last minute demand, maintain that price discipline, and adapt to the increasingly compressed booking patterns that we are seeing from our guests at the moment. So for our last segment today, we're going to share some insider tips for property managers to make the most of all this data that I've just shared. So the short-term rental market is stabilising rather than surging, but opportunity remains strong for property managers who stay data-driven, agile and proactive. You must capitalise on that last-minute demand. With booking windows now 4 to 5% shorter year over year, property managers must focus on real-time availability and dynamic pricing. The market rewards operators who can pivot quickly and capture those late booking surges as they come into the market. And I reflect that we should adapt to some of these shorter stays that we're seeing. Average stay lengths are continuing to decline, with guests opting for shorter and more frequent trips. So promoting midweek 2 and 3 night packages, having a gap night strategy is super important to cater to this behaviour that the market is commanding. And use marketing to emphasise some of those late and quick escapes and convenience and get that spontaneity. How can you tap into that mindset of the consumer right now? Consider your strategic minimum night requirements or add bundled add-ons to try and preserve that ADR while stimulating demand. Remember, ADR is what is really driving your revenue. And as you're looking at channels, have a balanced channel, but defend your direct booking channels, because we're seeing direct bookings continue to decline in share. So direct bookings dropped from 53% to 45% of reservations, and it's 59 to 52% when we're looking at revenue for Q3 arrivals. Meanwhile, Booking.com and Airbnb are gaining share. So make sure you understand how these channels perform for you and the value that they add. Because if you continue to push through OTA distribution, then it's going to erode your margin somewhat and also challenge your customer relationship. So please factor it in and plan strategically. You need to invest in your SEO and your loyalty programs and your guest retention campaigns and your conversion to try and reduce some of that long-term dependency on OTAs if that's your chosen path. And then lastly, leverage some of this December momentum that we're seeing to try and secure some early 2026 bookings. Remember, December's pacing plus 7% in RevPAR at the moment, so some of this momentum can be used to capture those holidaymakers as they're coming back. So offer returning discounts and incentives to book ahead and try and secure some of those early bookings in 2026. This can help smooth out some of that typical post-holiday demand softness that we tend to see. And prepare for continued volatility. While conditions are more stable than the deeper volatility that we saw between 2022 and 2024, the market is operating within these narrow bands with potential for sudden shifts. So if you're agile with a strong rate policy and you're following your pacing and you're ready to adjust quickly, you're going to be dialed in for those late booking surges that we're going to see and try and help you ride out some of those softer shoulder periods that are there. So if you've got your rate discipline, you've got flexibility, you're strengthening your direct channels and you're tailoring your marketing to evolve to this ever-changing traveller behaviour, you're going to be best positioned to outperform in 2026. Remember, data is your friend. So that's all we've got for this episode. I hope you enjoyed the update. I have one favour to ask of you, and that's please leave us a comment below. Let us know what you think, share your favourite segment, or suggest what you'd like to see in the next episode. To contact us or get more personalised demos, leave a comment below. Visit us at keydatadashboard.com or drop me a message on LinkedIn. We'd be delighted to help you. So that's all for now. I'll see you next time.